How do we invest and make money in any market? Right. Jim Cramer has a book where he speaks to how to do so. So let's take a look at, that, because it's very important that we understand that regardless if the market is going up, regardless of the market is going down, you can make money in any market. It takes skill, it takes knowledge, understanding, strategy, and all of those things. But regardless if the stock market is going up or the stock market is going down, you can make money in any market. Let's take a look at that.
How to make money in any market. And Jim is here with us now. Congrats on this new work.
Thank you for having me. The show has been unbelievable as always, and I love the discussion at the top about you just got to go with the flow, and I feel that's true.
You feel pretty good. We'll get to the book obviously in 2 seconds.
Sure.
You feel pretty good about stocks heading into Q4?
Yeah, I still do. I'm looking at certain stocks that just can't quit. I mean, the old line names like a Western Digital keeps going. Seagate names that we know for ages, forever. And I just find that what's happened is people have a groove. And they say, listen, I can keep paying up for these and up for these and up for these. And then out of nowhere, healthcare explodes. I mean, and Merck, which has just been a terrible performer because of five. Just using these as an analog, is each day it seems like there's something that comes alive with pleasure.
Okay, so with pleasure is how you've talked about the markets and stocks for all of these years. But you do pride yourself on being a teacher and trying to, export your knowledge to help people become better investors. You call this a how-to book. In what sense?
Well, look, I think that what I'm trying to do is democratize things. I want people to be at home to be every bit as good as you guys in terms of facility. All right, you're pure stock pickers, but I want people to understand what you say because it's incredibly valuable. And I want, for instance, I spend a huge amount of time on the PE multiple. What's the multiple? Because I never hear anybody talk about it. I talk about what my mom and my late mom, my late dad, the mistakes that they made. Like my mom felt that Pepsi, if it was at 100, was twice as expensive as Coca-Cola at 50, and that bothered her. We can't do that. We have to help people. My father always wanted to buy the greatest tip in the world. And he destroyed us on a company called National Video, which was a company that made vacuum tubes right at the height of when Solid State came out. So we have to know what we own. We have to like it. And we can't just say, you know what, buy and hold. You have to buy and do homework.
So I 1,000% agree with what Jim Cramer is saying here is you have to understand what you're invested in. You're not just buying companies just to buy companies. You're not, looking for the most popular companies. You're not just, blindly putting your money towards a business. This is ownership. So if you want to become a good investor, it's important that you understand the business that you are investing in. Knowledge is everything, right? So if you understand how that business makes money, the revenue that comes in, how much that business makes a profit, what's the profit margin? He talked about PE ratio, which is the price to earnings ratio, how that then plays into how expensive or if the stock is at a value price versus an expensive price. It's so many different things that you have to learn. And it's important that you take some time to understand the market and the businesses as well as how and which ultimately you're invested in. So take a moment. If you are investing in any company right now, if you're an investor in any business, take some time, learn about that business. If you don't already know about it, learn how the earnings impacts it. What's important to the stock price? What is the investors ultimately looking for when it comes to earnings, and how that business will continue to make more money and grow over the long term versus what possibly are the issues in the short term. If we are looking at long-term investing, then we then need to understand the business that we are investing in so that we can properly make decisions, because ultimately this game is about making money, ultimately in the end, and you have the same opportunity as anyone else as long as you understand the business that you're investing in, so that you can make money long-term.
All these things are about trying to get people to be.
I like to buy and do homework.
Yeah,
I like
say, hey, listen, I'm going to buy a stock and just do great. And I make these mistakes. I bought Bristol Myers and I didn't do enough homework on Bristol Myers.
But you want people to be investors, not traders at their core.
Yeah, I mean, what happens? Look, I think that I was a professional trader for a long time. I just think that a lot of people are at home. They're watching Mad Money when they get home, and they can't compete with people who are just just driven and know every piece of data, but they can, on the other hand, find some long-term stocks and compound, and we all think that compounding is terrific.
All right, Jim, first of all, congratulations.
Thank you, Joe.
To your point, Chapter 4, Finding an Edge. Chapter 20, Lesson 2, your stocks will tell you when to sell. As an investor in an environment that you and I both know, market structure has changed dramatically. What's the simplest way that you could do that?
What the simplest way you can tell it is that you take a look at what just goes down and down and down. Then you look at the balance sheet. I actually give. But I've never done the multiple stuff, and I've never done the balance sheet stuff. You take a look at the balance sheet. I mean, a lot of people can't read it, but you know what we got? We have chat, we have Perplexity, we have Grok, and you can ask them to take a look at the balance sheet and tell you whether it has too much debt. People have to start doing that. And the people who just say, listen, you just only need to be in index funds, they don't realize that if you want to go look at Bausch Health, Thank you for telling me how bad Bausch Health was. You can go in and say, is that balance sheet any good? And it'll tell you, no, it's horrendous.
The opportunities that we currently have with technology is like we've never ever seen before. Again, if you're not using artificial intelligence to help you become more efficient, I'm not sure what time you're living in. It's not about you necessarily being the smartest person in the room for you to know everything that you need to know. You need to know how to use the tools at your disposal to be as efficient and know all of the information as much as possible. Artificial intelligence can help you do everything. Jim basically just said that, hey, you might not necessarily know it yourself, but you can actually put in ChatGPT, Perplexity, and some of these other Grok, some of these other platforms, these applications, these AI applications, put a document in there, right? And ask them, prompt them, and basically ask them to give you all the information. Not just how much the stock will go up, but also what's the drawdown for the stock historically, right? And then what are some of the negatives that could possibly hurt the stock and hurt the business as a whole? There's so many different ways that you can get information using artificial intelligence. And in this time, I made trades last week using AI that I'm currently up over 50% in. And the only thing I did was ask AI, based on X, Y, and Z and the current share price of the company, looking over a 1 year out span in 2027, what is the estimated share price in 2027 versus currently? And ultimately, how can I make 100, 200, 300% return on an option trade? And it gave me all the information. It gave me everything. It gave me my risk to reward possibilities. It gave me what my less conservative risk, opportunity was at this strike price versus this strike price going out to January 2027. It gave me all the information I needed to make a fundamental decision based on the information. That current trade is at 44% profit, over $1,100, because I utilized AI. I already knew what I was going to do. I knew what I wanted to do, but I wanted AI to give me more information to justify and make sure that I was making the right decision. You can use AI to help you in every aspect of your life, and I encourage you to do so.
But the other thing that you focused on historically, as we've known each other, is that if you know more about the company, you're more comfortable owning it and actually buying more to increase your return in turbulent times in the market.
Yes. I remember my father sold boxes and bags for a living. We used to go to the Franklin Mills, this giant retail mall. And we would go on Saturday, and he says, we're going to get in front of Gantos, which Goldman liked at the time. There will be no customers. We sat there in front of it for 5 hours. No one bought anything. It was one of the greatest shorts I ever had. I mean, that's,
that was the Cramer channel check in the parking lot.
But he said at the end, we got to go in and buy something. This is a horrible day for them.
And let me ask you this. Has your view of what you think the quote unquote right portfolio should look like as you've evolved, as the markets have evolved? We grew up, it's 60-40 was the way people talked about the markets, but things are so different now.
Investors
have different and greater access to more securities and asset classes than they probably have ever had. How do you think about that?
Okay, I'm really glad you brought that up, because one of the major themes of the book, it's very radical and antithetical, but I think it shouldn't be to everybody here, is that you can own index funds and you can own some individual stocks. If you hear something that you like here, you can research it. You can make that one of what I call your 5-stock portfolio, with one actually can be speculative. Yes, if you want to own an OCLO, be my guest. You can have one of those after it's up 80 points.
Only one?
But yes, on a 5-stock portfolio, but I also want index funds. And look, we look at the Trump funds, these new funds where you'll get $1,000.
Right.
That's all index funds. So maybe you also buy 1 or 2 stocks for a baby, because I've got to tell you, individual stocks, whether it be FANG from 2013 or whether it be NVIDIA, they can change your life. I did a book signing yesterday at Barnes & Noble, and there were a couple people who were moved to tears because they had retired because of NVIDIA.
And Jim, I've seen it firsthand. I'll let you in a second.
So what he's saying is you want to be able to buy stocks as well as ETFs, right? So you can buy a group of stocks in an ETF, right? ETFs are trading funds, which are large funds with millions and billions of dollars within one fund that has a, holding account, holding up a whole bunch of stocks. So instead of being really risky on one stock, you can buy a group, right? So you can do that. You can buy individual companies if you want to, support and have ownership within one company. I say that you should own multiple, right? You should have 2 to 3 or 4 companies that you really, really believe in, that you really want to invest in. And then you can have 2 to 3 ETFs that you ultimately want to diversify so that you can have a total stock market ETF like VOO or VTI, or you can have a healthcare ETF like XLV to give you, that healthcare allocation within your portfolio. And then you can have QQQ, which is technology, or you can have SMH, which is all semiconductors. But ultimately, in the end, you can pair individual stocks with ETFs so that you can have kind of like a total allocation of the stock market. And we know that on average, the stock market goes up 8 to 12%. It's a fact. Google it. You can, or ask AI, it can tell you, which is a fact. So it's not risky if you understand what you're investing in, and pairing that with ETFs can ultimately help you because the drawdown is less versus one stock that craters because of something that happens bad within the company. So using the strategies of having 3 to 4 stocks and then maybe 2 to 3 ETFs is beneficial. If you're someone that only want to invest in ETFs because you want to be less risky, and let's say you're investing for your children, that's really beneficial too. There's no wrong answer. It's just more like what strategy you have as an investor, and ultimately what do you want to do long term.